Welcome traders to this special live market analysis video. Today we're going to check the euro dollar, the euro pound, the S&P futures, the EUS, and gold. So these four markets we're going to go through today through them from the Elliott wave point of view, and of course from the institutional point of view. Our main bias on the euro is bullish. We are looking for continuations. However, in this current market cycle, we are likely to have a little retrace back to the 116.80 area. It could go back to the 116.40 area. And then the plan is to continue with the trend. In the meantime, we can try to sell it, being extra careful, extra careful, always with proper money management and risk management, because we are going against the bias. However, at this place we are not able to buy it. We never buy at the highs or sell at the lows. But from this point of view, we can see that it's a clear a point of view of Elliott wave having this expecting this corrective wave. From the momentum point of view, we have the MACD divergence here and here, which tells that the market needs a pause in order to refresh the liquidity. And also we have the volume profile that is extremely useful. I prefer volume profile over Fibonacci levels, for example. So here on the volume profile, we have the value area. It's an interesting area. It's the 116.40. Also, that area is the area where the previous wave one finished here on the left, which of course is a key level here. And the point of control that is around the 116 roughly. So if the price sell-offs and breaks down the 80s, and let's suppose that breaks down the 40s, we can go to the 16s, to the 00 level. And from there, so somewhere there, we will see during the road the way to go long, the way to start buying it. Today in the trading room and also in the Discord room that we share the live setups for the Elliott Wave Street members, we have the... we're looking today for a sell trade on the euro. We already have a first trade on the 5-minute chart, which gives us at least a 1-to-1, and we are looking for a second entry today. And even if the price makes a fresh high, that's fine. We will be looking then for the rejection here of this liquidity. So this is the area that we want to work today on finding the leg down. But again, the bigger picture bias is bullish. So once we have a good discount, we are going to start looking for the bullish trade. Let's have a look at another one that today is extremely interesting, is the euro pound. On the euro pound, this is a swing trade that we are following this week, and it's similar to the euro. The plan is having the price giving us soon the signal. It could be the signal happening here, or after hitting the high. That's fine. We can move the wave 2 here to the right. It doesn't matter, because we want to sell it. Last week, we went short right here at this area. And this week, we're looking for the sell trade. It doesn't matter if it hits the high or makes the reversal before. Having a good trigger, it's important. So make sure that you have a good trigger that validates the setup, that validates, that confirms the setup, and we're going to be looking for that rejection at that area, and then the plan is to have a big sell-off on the euro pound, probably to break down all these levels here, the 85.50, the 85 area, to start moving lower into a wave 3. So this is the reversal zone. We just need to have a really good entry point that we are waiting for. Let's move into the S&P. let's move into the market. This week we are looking, traders, for a retrace on the S&P. It's absolutely bullish, and I completely agree with the bullish move. The S&P is likely to continue higher, 6,500, 7,000 points probably by the end of the year. But of course, the markets are not going to move all the way without any corrective or any retrace. There are going to be some noise, some corrective waves during the road. And we're starting this week with that point of view of having the S&P giving us some sort of retrace, probably back here to the 200. That could be the first target that we can look for. And then if everything goes well, we're expecting the price to move to the 140, where there is a lot of liquidity here. And if it moves lower, it's fine. But from there, it's where we're going to focus on following the trend. Unless we have a perfect ABC here, we will start buying it from here. So, of course, it's relative how the price is going to move into this corrective wave. But the main scenario that we have is the price coming back into this point of control. As you can see, is the same level as this previous high here. So it's more like a retest, probably into a three-wave sequence to this area, in order to start finding the rejection, and from there to have the bullish move, and from there to start seeing the push up, the mark up on the price to continue with the trend. Look, there is also a significant divergence here. The market is divergent over there, and it's time. It seems like the S&P went up too fast, probably, and it's time to have some retrace before the continuation. So bullish on the bigger picture, let's say, but on the very short term narrative, we are expecting an interesting retrace into this second wave. Let's have a look at gold. Gold also, it's interesting this week, is one of our favorites, actually. On gold, we are bullish. Last week, we were checking on the trading room this candle here. We did a special a comment here about this candle, because it's a high volume candle. The volume is the effort, and the candle shape is the result. And in this case, as we can see, the result of that effort, it's absorption. Many sellers went short there. That's why the price first moves down, but they got absorbed by the liquidity provider. And that absorption, traders, tells that the intention from the big guy is quite bullish. So here, it's our first bullish setup, just at the opening. Or here, it's another one. If the price makes here a C leg for the zigzag, well, that will be the entry point as well. If not, this is the one. And we are looking for a significant bullish move. Let's say the 350. Or the 390, or probably the 500 area, or at least the previous high. But we are bullish on gold, and we're following the move up. This is the completion of this second wave over here, and at least come back to the previous high. This is going to be an interesting leg on gold, and if you trigger properly, if you trigger precisely, you can have a great entry price and a tiny stop loss. Execution is key. Following these markets, triggering at the best price possible and with precision. So traders, this is the analysis on these markets for this week. If you want to find more about our project, go to elliottwavestreet.com. And if you have any questions, let me know. Also, I would like to know if you agree or disagree with this point of view. It will be interesting to read your comments. So make sure to leave your comments here on the video and to share your thoughts. And I wish you the best for this week. and make sure to make some good money. I'll see you soon. Take care. Bye-bye.